Hello and welcome back to the channel. My name is Wajahat. Today we are talking about options, and we're talking about options on chain. It's something that is still relatively early, and today we're going to cover a really big project in the option space. This time we're talking about Lyra, and it's in collaboration with someone who's really put in a lot of effort, 563 DeFi. Definitely go check him out on Twitter. We worked together on this project, and to be fair, he's actually created the majority of these slides here. He has some incredible alpha, so we really have to shout him out. So yeah, give him a follow. Follow his Medium page as well, because he's got some incredible write-ups as well, and I think you can really get some alpha from him. Anyway, today we're covering Lyra, and Lyra is an on-chain decentralized options platform, and options are something that I think is relatively new to DeFi. I think we've had a number of challenges with getting options onboarded in DeFi. We'll talk about them shortly as well. So first of all, for those of you who are new to options, what actually are they? Well, they are financial products. They are a type of derivative, and essentially they are contracts that a user can buy, and in doing so they get the right but not the obligation, which is very important, to buy or sell an asset at a predetermined price, and we call that often the strike price. And there's two types of option contracts available. There's call options and there's put options. Essentially, a call option is a contract that gives the buyer the right to buy an asset at a particular strike price at an expiry date. And a put option is the opposite. It's a contract that gives the buyer the right to sell an underlying asset at a particular strike price. Generally, if you think price is going to appreciate, you buy call options. And if you think prices are going to go down, you buy put options. But there's lots of interesting strategies that you can utilize with both call and put options that give you a variety of things that you can really bet on, essentially. Why would you want to do this in the first place? Well, there are a number of reasons, but in fact, much more than the 5 that I've just got on the screen at the moment. But here's just 5 that I thought I'd talk about why options are a good thing. Well, first of all, for hedging purposes, options can allow you to hedge against long positions or short positions very easily. They are very capital efficient. They allow you to implement new strategies. For example, you could go long or short on volatility, or if you thought that price were going to remain in a certain range, you could obviously bet on that as well. Tax benefits as well in certain countries, and at times they do offer a better risk to reward ratio than holding underlying spot. So these are just a few of the reasons, but there are many other reasons as well. And as we go along, you'll kind of appreciate some of them as well. Options in crypto haven't really taken off yet. Well, there's a number of reasons why. Well, first of all, options, especially being on-chain, are difficult because mainnet Ethereum gas fees are still too high. I think the actual onboarding mechanism is not really there for normal people. On-ramping your fiat currencies and then kind of using a bridge to bridge over to Arbitrum Optimism and then kind of interacting with all of that sort of stuff. It's very complicated. It's not easy. It's not a 1 or 2 minute process. It takes a while to actually get something like that set up. And so I think it probably affects the whole kind of DeFi ecosystem as a whole, but I think generally because of the way that options work, it has meant that it's been a little bit more difficult to get set up. What we have seen is that some derivatives like perpetuals have done really well recently. We've seen the rise of GMX, and we can see that they've kind of gone up on the list. But still, options being around rank 20 according to DeFi Llama with less than 150 million in TVL is not particularly good. And I think it's quite early, I'd say. We are quite early there, aren't we? It's interesting because if you actually compare TradFi to DeFi, well, in TradFi, options are around 30 times that of spot volume. Whereas options over here, you're only looking around 2% of spot volume. So there's a big difference there. And you can see just decentralized exchanges have a combined TVL of 20 billion almost, whereas options, 1/100th of that at 150 million. So big divide at the moment, big difference. But I think options are a key area of DeFi that I think is certainly going to grow over time. So yeah, let's see kind of how things develop. But I think there are a number of hoops involved. I think gas fees being one of them, but also just bridging and being able to utilize them efficiently with liquidity has been another challenge as well. So let's talk about Lyra. Now, Lyra is actually one of the largest option players around at the moment in the decentralized finance world. We do have options in crypto that are centralized, like Deribit, and they currently take around 90% of the total volume with options. So DeFi only really has around 10% of that, and Lyra is probably one of the better ones around. And that's kind of why I wanted to talk about Lyra today, because I think options are going to grow more on chain. They're probably going to take some of that market share away from Deribit, and I think Lyra is probably positioned well for that. And we're going to kind of cover today kind of what Lyra is, how it works, some of the interesting things that you can do on there, and just a complete overview really. So when you go to Lyra, this is what it looks like. You're going to see a page like this where you can buy call options, buy put options, and you can sell them both as well. They have a simple page like this that looks really easy to use, kind of gives you that Robinhood feel. You can see your strike prices on the left hand side, your break even, which obviously includes the actual option contract price as well. And then an important metric, your implied volatility. You'll have options that expire weekly, 2 weekly, or in 3 weeks, and hopefully with time, with more liquidity, they hopefully will be able to add kind of more long dated options as well. And if you click on advanced at the top here, you'll be able to see a kind of more complex system, more akin to that of Deribit. So that's pretty much what the interface looks like at the moment. They don't have too many option products at the moment. They have Ethereum on Arbitrum, they have Ethereum on Optimism, and Bitcoin on Optimism. So how does it work exactly? Well, 563 DeFi really made this lovely slide here, and I had to include this. Essentially, we've got two players. We've got the liquidity providers and the traders. Now, what do the liquidity providers do? Well, they deposit stablecoins, currently in the form of USDC and SUSD, which is from Synthetics, and they go into this market maker vault. The traders come along, they can buy and sell options against these assets that are in the market maker vault. And the market maker vault does four things. It calculates implied volatility, it hedges against two important things that we're going to talk about recently in a short while, and then it prices the option contracts as well. Now, in terms of pricing option contracts, it uses the Black Scholes model, which is an options model used in TradFi. I think it came around in the 70s, but essentially it uses a variety of factors like the underlying asset price, strike price, interest rates, time to expiration, and expected volatility. It kind of uses all those metrics together to try and come up with an accurate price. Now, there are some inaccuracies with it because of the way that DeFi is at the moment, but hopefully with time that does improve. Essentially, it uses this Black Scholes model to calculate the prices of these options, and yeah, that's pretty much how it works. Now, there's two main problems though. And they revolve around delta and vega risk, and we'll talk about that in a moment. And that's because these liquidity providers are depositing stablecoins, but the options that we're providing are with volatile assets like Ethereum and Bitcoin. And so how do you kind of hedge against those risks with asset price changes and volatility change, which is what delta and vega are? So delta risk is your exposure to the underlying asset price, and vega risk is your exposure to the underlying asset volatility change. And essentially what Lyra do is a hedge against both of these. And the way that they do that is they use perpetual exchanges to short or long the underlying asset. And they will also have a change in fee structure. So for options that actually increase total volatility when you're buying them, they'll increase the fees, and the opposite as well. They'll decrease fees for contracts that actually decrease total volatility. It's kind of like a way to incentivize you to basically go for one option rather than the other, and that basically helps to hedge against the vega risk. So these are two things that are really important to understand. I think having a good understanding of the Greeks in total is a good idea, and I'll try and find a video that I can link in the description below that can kind of help to understand the Greeks in a bit more detail as well. So Lyra's previous model use it was called Avalon, and essentially what would happen is that a trader would use USD to buy a contract. They'd buy an ETH call option, and the market maker will buy 1 ETH as a collateral in spot against that call option. Now once the trader closes or the position expires, the ETH is sold back to spot and the position is settled, and in doing so there were lots and lots of fees generated because it'd have to constantly buy and sell against spot. It'd use an exchange like Synthetics to constantly swap 1 ETH or 2 ETH or kind of whatever, just to hedge against that option contract. So that was basically a way to hedge against Delta. It wasn't very capital efficient though, and now Lyra is upgrading with a new update called Newport, and it has the same model. However, rather than using spot exposure, it uses perpetual exposure using platforms like GMX, and that is significantly better because it's a lot more capital efficient. And you can see from this slide here, beforehand these call options were 100% collateralized by spot collateral, sorry. Now they only need to be partially collateralized, and that's because they can use perpetuals to leverage the rest of the position, and that gives you like 70 to 90% more cash, which you can use to back other contracts. So much more capital efficient, and those improvements lead to a number of things. Number one, tighter spreads. Number two, capital efficiency. Reduce exchange fees, and because of those reduced fees, in fact a lot of it can actually go to the LPs now. In fact, I believe somewhere around $800,000 were paid to Synthetics in trading fees over the last 6 months, just because of the spot fees. And now a lot of that can actually go to the liquidity providers. So it's a really good thing actually for Lyra. They can incentivize a lot more liquidity now, and it also increased modularity. And now they can pretty much integrate with any other perpetual exchange, and that will help to scale Lyra a lot more. Since moving, so Lyra actually originally started on Optimism, but since recently has actually moved to Arbitrum as well, and we've seen that quite a large expansion, instant adoption really, with kind of TVL as well as open interest as well. So really good to see. We can see lots of metrics here in terms of the growth. Here's growth of the TVL. You can see it's just kind of up only in the last month. In fact, as of recording, I believe this is like 24 million or 25 million dollars now in TVL. So this is constantly increasing, and I think very soon Lyra will be the #1 DeFi options platform in terms of TVL. It's really just a matter of time, I think, really. And again, you can see the open interest on Lyra up only, up and to the right, and that's fantastic. In terms of actual traders as well, you can see it's been relatively stable this year, but just coming over the last 6 to 8 weeks, we've seen quite a rise here. And if you were to kind of plot a line against this, you can see that recently this is going up only now, up and to the right. And so lots more traders are coming to try out platforms like Lyra. So it's really good to see. And because of the kind of LP rewards that we have available at the moment, they're very, very attractive. And they are bolstered by, well, the Optimism vaults. So the SBTC vault and the SETH vault, these are the 2 vaults on Optimism. They currently have the Optimism token rewards being admitted, and they're quite attractive. Very, very attractive. So all you need to do is deposit your synthetic USD in, and you can basically get these OP rewards. And since Arbitrum's launch on Lyra, since Lyra's launch on Arbitrum, you can deposit your USDC here, and they are offering quite high rewards in the Lyra token, or the staked Lyra token. And I think this is key in really growing significantly, being able to attract liquidity. With the Newport upgrade, they're able to have significantly more capital allocated to things like LPs rather than paying Synthetics or paying fees in kind of spot volume that they had to do. Now they can use that for LPs, and I think this is a fantastic place to kind of park capital. Of course, you've got to be aware of risks, smart contract risk, option risks and things like that. There is still a chance of things going wrong here. There's still Delta and Vega risk available there, so you have to be aware of that. But I think generally this is a good place, and with high kind of APYs, it's very attractive, isn't it? On your stablecoins. If we just have a look at some of the kind of other option platforms around, OPYN is the largest one at the moment, but the difference between Lyra and OPYN is not too much anymore. I'm sure as of recording, this is probably over 30 million in TVL, and that really means, who knows, maybe in a matter of just a month or so, Lyra will actually get to rank 1. Of course, there's Dopex and Ribbon that have their structured vaults. They offer kind of a different service than that of Lyra. And there's Hedrick and Premier, which are, I think, a lot more similar. But you can see that Lyra is much more ahead at the moment. Currently, the supported assets are Bitcoin and Ethereum, and hopefully in due time, of course, as liquidity does grow, hopefully we'll able to have a variety of other supported assets, but one step at a time really. And what Lyra have done very well is they've actually partnered up with lots of other brands as well. So whether that's Synthetics or GMX, which are going to help with the perpetuals, or whether it's things like Polynomial, which have structured option vaults built on top of Lyra, and they perhaps might appeal more to kind of people who just want to passively just earn from options, and also partnering with kind of other DeFi products like Camelot to basically build liquidity for the Lyra token as well. So I think they've got lots of interesting partners here. You can have a read of some of them and some of the partnerships and some of the interesting things that they're going to do. But it's a good sign to see that their business development team is doing a good thing, interacting with lots more partners, and hopefully that builds more growth for themselves as well. In terms of tokenomics, the Lyra token is actually split 50-50 in terms of community and team, DAO, and investors. You can see I've written on screen kind of some of the percentages with each of these kind of subgroups. You could argue that there's probably a lot more going to the team and the DAO and the investors as you'd probably like, but I think the model is okay, and a lot of these tokens are vested for quite a long time. I believe it's around 8 or 10 years, so it's a slow and steady emission schedule, and currently there isn't too much of the circulating supply in terms of the overall supply, but with time that will obviously improve over the next many years really. Now, the Lyra token is important for 3 main functions at the moment. Number 1, governance, which we'll talk about in a moment. Number 2, staking, and number 3, boosting your rewards. And hopefully in future there will be some more fee generated or value accrual to the token, and again we'll talk about that in a moment. Now, the other benefit is rebates, and by having a certain amount of staked Lyra, you can actually claim rebates on some of the options that you buy. So that's always a good thing, and yeah, you can see directly on screen how many Lyra you need for your percentage rebates. In terms of revenue, well, one of the governance proposals at the moment, their governance proposals are known as leaps, and they have a variety of them, which I'll leave in the description below because I think governance here is quite important. And you can see here that they do have a leap regarding the potential of X Lyra, X Lyra being some level of revenue generating Lyra token. I think one of the problems at the moment is that they really need to boost LPs, because the more liquidity they have, the better it will be for option traders. And so the question is really, who do you want to incentivize more? Do you want to incentivize the LPs, or do you want to incentivize the Lyra token? I think ultimately there has to be a baseline for both, or a balance of both. But for the time being, the LPs are being rewarded heavily, and I think hopefully if this proposal passes, or a similar type of proposal passes in future, we should see a lot more value accrual or revenue for the Lyra token. But we'll see kind of how things go over time. They do have a pretty interesting team. This is Mike Spain, who is the main guy at Lyra. I watched a few of his interviews, especially one with the Bankless team, which I recommend, and I'll leave a link to that in the description below as well. You can learn a lot about kind of what they're doing and kind of some of their plans around the option space, and they have a variety of other team members available here that you can see. That I just took this screenshot from Twitter. You can go check them out and see kind of for yourself, but it's good to have a docs team as well. I think that always helps to build some trust as well, doesn't it? And really here what I wanted to do is just kind of explain some of the differences between some of the other kind of option platforms and kind of what Lyra has that the others don't have. So in terms of AMM, well, Lyra has an AMM model, Hedgic and Premier do as well. Dopex and Ribbon don't, they have their structured vault options instead. Lyra do have vault options, but of course it's accessed via some of the partners that they have, which have kind of built on top of Lyra. I think all of the kind of option platforms available at the moment don't have asset variety, including the centralized options like Deribit. At the moment, we really only have Bitcoin and Ethereum. Hopefully with time, as liquidity increases, we will see a variety of other options. But for the time being, I think those are the two that we have. It's nice to see that most of these other option platforms are on layer 2s, Lyra included, and fees generally being relatively cheap. But importantly, we also have a docs team here with Lyra. Now, I think that does make a difference, especially with trust going forward as well. So overall, what are my thoughts? Well, I think Lyra is positioned to be one of the game changers in the option space. They have a strong team and are working hard. They've recently developed and built onto Arbitrum as well. And I think their recent update with Newport is going to really change the way that Lyra operates. I think we've seen that it's a lot more capital efficient, and I think ultimately that just makes a better environment. With incentivizing LPs, we're hopefully going to see liquidity grow, and therefore I think the overall option experience is going to be really good at Lyra. In fact, it's pretty good already, and so overall, yeah, I think Lyra is a really fantastic platform, one that I'm going to use and one that I'm looking forward to continue to use. And yeah, I'm going to try and make some more videos about Lyra in the future. Probably make a video soon about how you can actually buy an option or sell an option on Lyra. A nice tutorial, I think some of you guys would appreciate that. And yeah, if you've got any questions about what you think about the option space or what you think about Lyra, let me know in the comment section below. I'm happy to help out at any time possible. So that's all I've got for you today. A little overview on the Lyra platform. Smash the like button, subscribe to the channel, and of course I'll be back with another video soon. One last thing just before I go, I did want to say a massive thank you to 563 DeFi who helped to make a lot of this presentation, gave me a lot of ideas. We've been talking a lot about Lyra recently. So please follow him, support his work. He does some fantastic work. And again, I'll leave his links in the description as well below.